A quick one before our live stream starts. If you're not already subscribed to our YouTube channel, we go live there every day trading the markets, covering world news, and talking through setups in real time. Hit subscribe so you don't miss the next session.
Still doom scrolling? Brain rot taking over? You'll focus tomorrow, right? But what if tomorrow never comes? What if it all started with one small choice? The world won't wait for you. Opportunity is moving right now. One decision is all it takes to shift your momentum. Fuel your mind and watch possibilities open up. Small wins stack up, focus sharpens, growth begins. Everything changes the moment you focus. Lock in and make the switch today. Bring your ambition into focus. Trade with Switch Markets.
Are you still trading everything manually? More traders are moving to automation, running strategies 24/7, removing emotion, and staying consistent. Now with Switch Markets, you've got the tools to build and run your own automated trading systems, so your strategy delivers even when you're asleep.
Meet Switch Markets, a broker for ambitious people who want to trade the financial markets.
You mean that I can trade things like Forex, stocks, even gold with you?
Yes, you can even trade the coffee bean market with us.
What about digital currencies? Can I trade them too?
Absolutely. Maybe now's your time to get in.
Oh, and are you regulated?
Yes, we are.
And how easy is it to deposit and withdraw? Will you charge me any fees?
It's easy. Deposit and withdraw instantly. Nice and simple. And unlike that guy, we won't grab any fees from you.
Do you have a low spread trading account?
We certainly do. Pick from our zero commission or our low spreads account. It's up to you.
Okay then, what makes you so different from every other broker out there?
Our 5-star rated real human customer support and our perks package worth thousands. No other broker can beat it.
So, who did you say you were again?
Switch to success. Trade with Switch Markets.
Getting started in trading shouldn't be complicated. You can open an account, get set up, and be ready to go pretty quickly. Now, if you've been thinking about it, take a look. Click the link in the description below. You can even start with a free demo account.
In trading, like climbing, the hardest step is to pause, hold, and trust your position. Ambition pulls you forward. Focus keeps you steady. Together, they take you higher. Bring your ambition into focus. Switch Markets.
Already trading with another broker? Fair enough. But if you haven't looked around lately, you might be missing out. Now, Switch Markets is picking up awards, offering tools most brokers don't, and their support actually shows up. It might be time for you to switch to Switch Markets. Click the link in the description below to get started today.
Discipline starts before the first punch is thrown. Focus sharpens in silence. Repetition builds control. Every movement prepares you for the fight ahead. Trading isn't luck. It's preparation. It's grit. Your fight is won long before the bell even rings. Champions trade with Switch Markets. It's time to bring your ambition into focus.
Are you still with the same broker? Now, there are better options out there. There's more tools, better support, and a platform built for traders. It's time that you demand more from your broker. Take a look at Switch Markets. Hello, everyone. Welcome back to the Trading Room. I'm Shain Vernier, and this is the Rally-Based Rally Trading Strategy Workshop. Today, we're going to cover the Rally-Based Rally. We're going to talk about some live trades. We're also going to recap our weekly performance and look at a few trade ideas. One that did not go so well, and because we got in the freight train, that is the gold market. But I'm going to go ahead and walk through that. Remember, on this live stream, it's not all about P&L. We don't run from losers. We don't try to highlight the winners. What we do is we dive into the losers, and we try to figure out exactly what went wrong, and that's the best way you learn. One of the first lessons I was ever taught, you learn from losing. Well, I say learn all the lessons you can from losing. Just don't lose too much or you can't trade anymore. So I want to welcome everybody back to the Trading Room. Bobby Bob, good to see you over there in the How to Trade community. Today we're going to tackle one of the most popular trading concepts out there right now. It's an ICT concept. It's called Rally-Based Rally. For me, it's an interesting strategy. It's one that's so easy that it should be illegal, and it probably is illegal on real short time frames because you lose money typically. But if you combine it with a few other indicators, maybe some confirmation, then you got a great shot to get in there and make a few bucks. So Tuku, welcome. Tuku, everybody out there in YouTube land, good to see you. If you're watching on X, been a lot more viewers on X. So if you're watching on X, welcome to the room as well. Okay, let's go ahead and get started. We got some housekeeping to do first that I do want to take care of before we jump in to the Rally-Based Rally trading strategy. But essentially, it's just a few trade idea updates. You can see this dollar-yen trade. I have been just sort of pumping this one all week long, saying, hey, stay tuned for that 160.49 level. Looks like it's probably coming our way maybe next week, maybe towards the middle of next week. So we're definitely still watching that 62% level as a sell. I do still like that idea, but I did want to recap because it hasn't come into play this week. Kind of surprised that it hasn't. Lots happened this week, though. Lots happened. Also, our trade idea, XUSD. We were looking to step up and sell right in front of our 38% monthly retracement. This one was a loser. This one was a breakaway loser and a great example of cutting your losses. You've got to be able to cut your losses. Typically, when I'm putting a trade idea down, it's a 1-to-1 ratio. So if we're looking for about $11, I would have like an $11 loss on that. So we would have been exiting at about 45.81-ish, somewhere in there. And the basic premise behind this trade was we were really looking for that 45.75 level to hold. And you can see it just did not. We got some nice compression right in front of 45.75, and then it broke. Typically, if you see this right in front of a horizontal support or entry level compression in front of your number, you're in big trouble. And you can see right there, it broke against us and then just went right up. I would have been stopped out somewhere right in here. Wouldn't even have messed with it. However, if you did hold it, you had a chance maybe to make a few bucks on the downside right there a few hours later. But honestly, if you got out of that one with just just that initial loss, then you're doing very well. The market's up and away. We are going to apply the Rally-Based Rally to short time frame gold trades today, and we're going to dial it in as soon as we know exactly what the strategy is. So I did want to do a little bit of a recap and some housekeeping there. We do not run from losers. That right there in the gold market, sometimes you just got to get out of the way of the freight train. 1 to 3% on any given trade, a maximum of 5%. If you're going up in the 7 to 10%, I'll allow 7 maybe once or twice here or there just so you can learn a lesson about trading leverage. But other than that, boy, that's a tough way to make a living. 7% risk is a lot of risk. Week 34, 2026, you can see Monday, Treasury auctions, nothing. Really nothing. Wednesday was the banger. Scott Bessent, U.S. Treasury bond buyback. That was the news event this week. FOMC minutes was also another biggie. Yesterday, big time trading day. Philly Fed jobless claims didn't really mean much in today. Not much on the schedule. No donation Friday. That's exactly what we're dealing with today. This is what we like to do on Fridays, get our psychology right, get our heads right. Ralph H., good to see you, Ralph. We've got to be able to understand what's happening, not just with our bank accounts and our trading accounts, but what's going on in our head. Monday, get momentum going. Tuesday, Wednesday, Thursday, pedal to the metal. If you want to see pedal to the metal trading, go back and watch Wednesday's live streams. We executed, I believe, 5 or 6 trades. Heavy volatility, heavy leverage. No donation Friday. What does that mean? We didn't trade any at all yesterday. We didn't execute a trade yesterday. Today, we've got to preserve the momentum. We built some beautiful momentum this week, made some money. Now it's time to sort of throttle it down and get ready for next week. Now, here's the deal. I put this psychology together from my own beats over the years. Fridays were some of my worst days. So what do? We make sure that we at least walk away a winner for the week. Winning week, you take at least 50% of your profits. At least. Losing week, if it's small traded as usual, if it's a big losing week, come back Monday. You don't want to press it up on a Friday and make that hole even deeper. Joshua, good to see you. Joshua, welcome. Crazy game. Hey, bro. What's up, crazy? Neutral, if you're having a flat week, trade as usual, reduce your leverage, or think about not trading at all. And that essentially is about it for No Donation Friday. It's just a psychological mindset that can keep you in the game for a long period of time. Okay, our weekly performance this week, pretty good. You can see Monday was sort of a scratch day. I love that on a Monday. Don't really care at all about making money on Monday. Tuesday, went negative by about 800. No fun. Wednesday was our aggressive big day. We hit that WTI position trade that was beautiful. And then you had Thursday right there. Thursday, nothing. Remember yesterday was dead as fried chicken. There was no trades to be had. And you can see we just sort of walked through the week. There's all of our trades. Those are outlined and they are done all live. There's no shenanigans there. All the trades that were settled after our live streams were updated on my X account, Shain_V_trader. You can find it all there. Transparency is the key. If you have any questions at all, be sure to ask. All right, let's go ahead and get on with the rally-based rally strategy. I really like this strategy. I want to get into the workshop, and I want to cover this I'm not going to cover it quickly, but it's a really easy strategy, and I want to cover it briefly so we can get in and do some live trading. Now, remember, according to our 50% rule on our Fridays, right, we bank at least 50% of our profits. We're up $2,800 for the week, so you're looking at maybe a max risk today of $1,400. We're not going to do that. Our max risk today is going to be about $750. We're going to risk $750, and we're going to look to maybe double up, maybe triple up. We'll see. We'll see what the markets are doing, but what we're doing is we're walking away this week up $2,000. Now, everybody's going to ask me, Shane, your leverage is demo dollars, number one. Everything I do on this stream is designed for instruction, and it's also scalable. You can do this in your accounts. You can trade the kind of size we've been trading on your evaluation accounts. Even a live account will support, 2 lots here and there, 2 lots on gold. Bigger trades, 3 lots on WTI. Okay, those are a little bit large, but realistically, we're trading like 1 lot on the NQ. Pretty good stuff. You guys can scale that. I mean, this isn't crazy leverage like you see all over YouTube. This is viable leverage. These are the sizes that I trade. So I want to make sure that there's full transparency there. Don't want to make sure that nobody's getting any illusions. Oh, well, he's just doubling up. We're not doing any of that. Those trades, each and every one of them are outlined. I'll probably post that on X later today, our weekly performance, and then you can go back through the live streams and watch the trades. Transparency, guys. Transparency is key. There is none of it on YouTube. Everybody's trading huge size. Everybody doubles up after a loser, and everybody typically falls victim to gambler's ruin. I don't want to see that for any of you. Martingale systems don't work. Eventually the wolf comes calling, guys. All right, let's get on with it. Rally-based rally. Really a fantastic strategy. I mean, if you're interested in this type of trading, basically it's an ICT concept. Very simple, and that's why a lot of people really love it. I mean, they really love it. Let's go ahead and right here. That's the screen I was looking for. My apologies. Rally-based rally. Purpose of the setup. Strategy looks for a strong directional momentum, a pause or consolidation, and continuation in the original direction. That is it. That's the crux of it. I mean, that right there is essentially what we're talking about. Rally-based rally is very simple. We're looking for uptrends. We're looking for a move, flat mark move. Now, this base area is also known as a demand zone. And what a demand zone is that's where the buyers are beating the sellers. It's a demand zone. It means that something's hot from there. So if you go down to buy, a brand new Chevy pickup truck here in the United States and you see one for like $17,500 or $20,000, that's going to be a demand zone. Everybody and their parents is going to be buying a brand new truck at about $20,000. So you can see that by this chart, it's very simple. Rally, base, rally. We're looking for uptrends. We're looking for directional moves. We're going to identify the base, and we're going to trade the uptrend based on that base. We're going to trade the uptrend sort of with a foundation right there on that neutral level, on that base level. Now, it's used for trending markets, uptrend definitely, clean momentum legs, whatever you want to call it, retests into demand, yada, yada, yada. The big thing to remember is it's a demand zone right there. It's demand. It's the base. We want continuation. We want to get in on the prevailing trend in the price action. That's all there is to it. Strong impulsive move with clear directional intent. There it is. There's going to be your initial leg up. Flat up. That's all you got to think about. Move, flat up. This area right here is the zone. That's where everything's going to happen. That's how we're going to build our trades. All right. The consolidation period is interesting, though, because if it becomes too long, we're going to run into a thing where it's just sort of a breakout. Well, essentially, a rally-based rally is a breakout. It's a move, it's consolidation, and it's a break. Move, consolidation, break. Move, consolidation, break. That's all it is. That's it. I like it. It's going to get a little harder, though. The concept's very easy, but it's going to get a little harder. So how are we going to trade this thing? That's the real question. Well, it's very, very simple, and this is what really separates, pardon the expression, the men from the boys, or the women from the girls. It really does. The bottom line is it separates the winners from the losers. How are you going to trade this thing? How are you going to manage your trades? What are you going to do that's going to ensure that you're a profitable trader as opposed to a loser trader? The mechanics of your stop loss placement is very simple. That stop loss is misaligned, but you can see rally. The base zone is where we're going to base our trade. So what we can do is we can play a breakout of the base as our entry. We can wait for pullbacks into the base. That's what I like doing. That could be our entry. It's profit target. You're probably looking at, most people are going to be using Fibonacci extensions. They're going to be using big round numbers, key levels, things like that. We're going to use static risk versus rewards. I approach things very, very simply. 1-to-1s, 1-to-2s, 1-to-3s. I like that. As long as we're getting in and we justify our trade by at least a 1-to-1 move, I really don't have a problem with it. I really don't. We can also manage them in dynamic fashion. That's probably what we're going to do here today, but that's a little bit more advanced, and I actually have to show you what we're going to do in that situation. But we can definitely trade this in a static fashion where the rules are concrete. Stop loss is going to be below the base. I like that as a general rule on short time frames. Stop loss is going to be below that demand level. Absolutely love that. But what I don't love is the idea of sometimes taking a position on longer time frames and leaving your stop here, especially if you're playing a breakout. You could play it a lot tighter and maybe look for a little bit more of a, I would say, a measured approach, not necessarily these huge positions. So that's going to be your essentially, that's what you're looking for. Impulsive rally, mark the base as demand, watch for the breakout from the base, prefer entry on a retest or confirmation. For me, I like going long, not on the breakout. I really don't. I like pullbacks, and I like coupling this with the secret sauce, which for me is going to be the Fibonacci retracement sequence. So we definitely want to go ahead and make sure that we know what we're doing there. As far as, our entry and confirmation, what are you really going to have here? An aggressive entry is just your break, your conservative entry. That's more my style. However, we're going to trade this thing. Conservative entry is the pullback. To me, the pullback number 2 right here is what makes this strategy sing. This aggressive entry, you're just essentially playing a breakout. So you could easily run into a rally base. Well, it's still open for debate whether we get the other rally. However, if you play that break and then you get the pullback back into the base, you really have a support zone. You really have a demand zone identified. And that right there, couple that with a Fibonacci retracement level, and now you're cooking with gas. You really are. Now you're cooking with Crisco. You got some good stuff going. So I'm looking at a number 2 with Fibonacci, sort of Fibonacci confirmation. To me, that's what takes this thing to the next level. Now, Confluence, I mean, you can see they're basically saying number 3, putting Fibonacci's in their sessions, candle confirm. Yeah, all that to us is intuitive, so I wouldn't get too carried away with these fancy graphics. Conservative entries are the best. Aggressive, if we want to be aggressive, we can do it. We just got to manage our risk. Okay, let's go in on the prowl for some live trades. I think that's going to be a lot of fun. As far as your trade management principles, I mean, risk, we're going to do all this intuitively. Risk, profit-taking, stops management. It's better that we just get in and start trading this to really show what this thing can do. But these are the principles. Remember, every trade's got to have a good entry. It's got to have a good exit, stop loss, and profit target locations. That's all there is to it. Our management, trade management, like anything, will really separate, like I said, the men from the boys, the winners from the losers, the women from the girls. It really will. That's what this game's all about. So let's trade it. All right, let's start with a silver chart, 1 hour silver chart. You can see right here. I sort of spotted these a little while ago, but I do want to just spot a few demand zones before we get going. I'm going to go ahead and use my crayon, my highlighter, sort of John Madden style. Sean Evans, good to see you, Sean. Welcome. You can see right here, here's going to be sort of, there's your sell-off, there's your trough down here. So there's your rally, boom, there's your rally, there's your base, there's your rally, right? So from up here, we're looking for a pullback down in here. We didn't get it. No, that's fine. So what do we do now with this silver market? Well, I mean, it's still very much alive. So there's your rally, there's your base, there's your rally, there's your base, there's your rally, right? So we're working on a base, aren't we? Let's run through that again. I know I did it fast. Maybe we'll use rectangles, make this a little bit easier to see. There's your base. There's your base. You're working on another base, aren't you? So the real question becomes, do we trade a breakout above that zone? What's the high? It's $70 in silver right now, 70. What do you think's happened right here? You're getting a base because of a key level. Do we want to buy in above that key level? If we do, the trade would look something like this, right? Let's say we get a 1 hour close. I don't trade the 1 hour chart really, but this is pretty instructive. Then your trade's going to look something like that. Stop loss is going to be down here. Profit target would be up here. That would be a situation where we could play a breakout. We would play it above a key level because we know we've got the rally, the base, the rally, the base, the rally. Now we're working on the base phase. If we're going to be aggressive and play the break, we're buying above 70. Stop loss beneath our level, I would say I would put it down in here somewhere, probably 69-ish. You could put it beneath that swing low if you wanted to. Pretty big risk though, but that would be your trade. That would be an example of a very, very high risk, high reward trade that's aggressive on a break. All right, let's get down to short time frames here. Let's go gold, and we do want to pull up our trader here. Demo trades. Remember, what do we have potentially to risk? I'm going to risk a maximum of $750 today. We're up $2,800 for the week. There's no way we're going away a loser. Number one lesson of trading is what? Never make a winner a loser. So what do we have here? This is a 1 hour chart, of course. Let's take this down to like a 5 minute. Let's get in here. Let's get anxious. See if we can get a trade going. Okay, beautiful. Anybody see it right away before I mark it? 5, 4, 3, 2, 1. All right, here we go. Rally, base, rally. Simple. Rally, base, rally. Okay? Maybe it's easier if I mark these with just the base sections. Anybody else see the base? Base is right there. There's your directional move. There's your flat line. There's your move. What do we want to do right now? Buy the base. Buy the base, buy the base. The problem here is our Fibonacci's, right? Our Fibonacci's probably aren't going to be that great. You got a spike low there and a spike here. Essentially, that's going to be the zero zone. Something like that. What could we do? A couple of ways we can do it. We already broke. If I want to see that as a demand zone, I could enter down in here somewhere. We could do something like that, certainly. Buy right there in the middle of the base. I need help, though. I need a better entry point than that. What happens if I just look at this macro wave? You can certainly do Fibonacci's in this sequence. There's no question. Short time frames, sometimes those spike to spikes get a little nasty. Oh, baby. Look what we got there. Nice big rally. Demand zone set up beautifully right around your 38% retracement. That's a tough trade to not take. Where do we go, though? Where do we go? Could go here, right at the top of the sort of the base. You see, I just drew it real dirty, but that's what it is, consolidation. How about right in the middle of the base? How about 1450? Buy limit. 46, 1450. That's our buy. Buying right in that demand zone. 38% retracement tells us we're in an uptrend. This would be an example of number two. This would be your second one, right? This would be conservative, coupled with a Fibonacci retracement zone. What do we want out of this trade? Well, I mean, it's an interesting question. Theoretically, the bottom of this base zone is going to be right in here, right? Right beneath that spike low. Stop loss maybe right in here. Sort of fits the bill for what we want to risk today, doesn't it? 575, maybe we just extend a little bit. Take profit, at least a 1-to-1. Or we could take a 1-to-2 or a 1-to-3 or a 1-to-4. You're probably not going to do that, say, on a Friday because we're going into the weekend break, right? But we know that we want to be long gold, and if we get a shot to be long gold right here, of course we're going to take it. That's a pretty good trade. That's a pretty good trade. If this was a Thursday, yes, I would condone risking 600 to maybe double your money for the week. And instead of walking away with 2,800 for the week, maybe walk away with 5,000 for the week, risking 600. Hell yes. Absolutely. That's called flipping the, not flipping the script, but flipping the game in your favor. Playing with house money to compound those gains. That's what compounded returns are all about. That type of trade right there is extremely attractive, but it's not attractive today. Friday, you can't take home anything. I wouldn't take home anything in this environment. Long, short, sideways is whatever. Be very careful taking home positions over the weekend. This would probably be our trade. I don't go any lower than a 1-to-1 unless we're tick scalping. And then in this instance,
We're not tick scalping. Now, of course, we're going to manage the trade sort of on the fly, and we're going to be smart about what we do. We're not just going to take a loss to take a loss, but that type of trade right there, we're only $9 down the queue. If we do get an opportunity down here, it may be a very good rally-based rally trade and pretty much an according to Hoyle in my view. Now, as far as is this wave count, let's back this off to like a 15-minute chart. I got some questions. I'll get to those right away. See, beautiful. See, one of the things we find that nobody really, there's your base on a 15-minute chart, double doji. I mean, that is pretty strong, right? Spike low, spike high. You'll notice that the lower we go in time frames, the choppier it all gets. That's a great lesson if you're brand new today or you have never seen one of these live streams. That's a great lesson. The smaller the time frame, the lower the time frame, the choppier price action gets. Now, it sounds obvious if you've been in the markets for a few years. It really does. If you're brand new to the market, so you may not understand that concept. Hey, when I first started, one of my partners was and this is back in 2011, one of my partners was university educated, had advanced degrees, went to some prestigious universities here in the United States. Smart guy, but he flat told me to my face, he says, a chart's a chart's a chart's a chart. You show me a yearly chart, you show me a 1-minute chart, it's all the same. And there couldn't be anything further from the truth. The smaller the price action, the smaller the duration you get involved with, the choppier the price action. Now, I'm not going to sit here and tell you can't make money trading 1-minute charts. We're going to do that today. We're going to pull up some futures contracts. We're going to take a look at this rally-based rally on a NASDAQ, an NQ chart, on probably a WTI crude oil. We're going to look at it on an E-mini S&P 500. Not saying you can't make money on those short duration charts, but remember, the longer the time frame the chart, the clearer the price action and the less the garbage, unless you're trading like Shiba Inu or altcoins, then it doesn't really matter. Those charts, I mean, they look like hieroglyphics to me. Okay, I've got some questions here. I want to cover these for sure. Let me see out there in YouTube land. Popson, good to see you, Popson. Welcome. During an aggressive buying period, this is the only system that can work. I'll tell you what, Popson. Just like anything, these types of strategies, I don't care really what you're doing. I mean, we could make a case that I guarantee you if we throw this gold up on our 920 EMA crossover on some time frame, we catch the buy. I would almost guarantee it. Now, in an aggressive buying period, though, when you see things that are trending, yeah, rally-based rally is pretty skippy. It's pretty good. It's a good observation, Pops, and thank you for joining. Thank you for contributing. Ralph H. over in the How to Trade community. Is this the best for the 1-hour time frame or the 4-hour for Forex? If we're going to trade, I mean, realistically, Ralph, if we're going to trade Forex on the 4-hour chart, it's a position trade. It's a swing trade. And I remember our conversation, so you're sort of partial to swing trading. It's a beautiful thing on a 4-hour chart, Forex swing trading. But that is absolutely 100% swing trading. You believe me, 4 hours, rally-based rally, you're going to look to catch some trends and you're going to look to catch some moves. No question. And those could be multiple days. Okay, this market's coming right to us. We've got our risk down. We know what we're risking today. This is it. This will be our trade. I would absolutely love to see this elected. If we get this elected in the next minute 45, 5, 6, 7 minutes, we have a really good chance on this one to get, I know we're going to get at least some positive price action. You're not supposed to say that you know anything, but we have a pretty good chance on this one. Now, if the market crashes and it sweeps us out, it's important that we get out. It's important that we rip the Band-Aid off and take the loss. This type of trade formation, though, this is pretty strong, and I got to think there's some bidders in there, especially with gold as strong as it's been. Now, if institutions are involved and they're crashing the market right now, there really is nothing we can do about it, but we do have to take a shot. I mean, that's the game. So we want to get in. Okay, right now we're sort of entering our base range right here. I want in right now. I want in right now. Right now. Let's get our level right here. Now the question becomes: do we stay patient with what we're doing, or do we go market order right now and try to get in? If we go market order, we're going to get a lot of slippage. But that you can see the demand. The demand is there in that zone. So the real question is where do we go long at? Did we miss our trade? I don't think we've missed it yet. But this is the one we want. We want it right now. Right now. Okay, there it is. There was your probe. Are we going to get a chance? Now, right now, it's important to ignore FOMO. Ignore it. Now, we had our entry point down. We've got it at 146, 1450. That's our entry point. The tendency right now is to buy the market and chase it. Now think about it. If we're buying 46.17s and they're going to hit us with slippage on top of that, more than likely we're going to get in at the worst. Like right there, we would have been at 46.18 and a quarter. So in order for this to be worth it, we know where our stop loss has to be located, right? Right down there. So if we chase price right here on a FOMO trade and this thing explodes, it's got to go up in here to pay us off. That's the question of all questions, guys. It's the question of all questions. Do you enter right here? Did we draw our base right? I drew it quick and dirty. We could have extended our base up here. Maybe that's a better look at your base. Is your base your biggest candle? I don't think so. I think the base is where the bodies are. Now, the beauty of this on a futures contract is I could pull up a TPO and we can see exactly where all the volume is, and we'll know what our base is. So we're going to stay patient. We're going to stay patient. Now, it may hurt us, but we want in right now. We really do. Let me see. Great question, though, Ralph. The 4-hour chart. I tell you what, we'll pull up some 4-hour Forexes before we sign off here today, because it's a good question. When you're talking about like Euro USDs or something that's been moving big, yes. 4 hours, yes. 1-hour chart can be good as well. It's just what you're comfortable with. I don't have much experience with the 1-hour chart. We could go to 30s. The problem with 30-minute charts is they start to get choppy, especially with Forex pairs. Okay, we're going to be dancing here in a minute. And so the real question is how are we going to manage our trade? Now, I do like the static risk versus reward. There's a lot to be said for that. However, the pressure is definitely down in the last 15 minutes. We want it right now, though. We really do. If we can get it now, we got a great shot. 114.50. Shane, where did you pick it out? Picked it out of a hat, right? No, I put it right in the middle of our rally, right in the middle of our base. So if you want to be aggressive, don't stick to my entry points. If you say, okay, it's in the red square, it's hammer time, let's hit it. I don't have a problem with that. I really don't. But you have to assume the risk. And that'll more than likely put us over our 750. So what we'd want to do is dial our leverage down a little bit and maybe take a longer trade. But you can see that market's basing out right in our base. Let me see. Is this considered trading a wave count 3? That's a great question. Well, it would be a 1. A 3's a mover. So essentially, we would be trading a 4. 1, 2. Seriously, great question, though, Ralph. That's an astute question. Elliott Wave, guys, for those of you that don't know what we're talking about Elliott Wave. Ralph asked, is this considered trading a wave count 3? In my view, and I keep my Elliott Wave work very simple. We have an expert that's in the How to Trade community, VJ from India. He's an expert in Elliott Wave. He knows a lot more about it than I do. But this is sort of what I would look at this wave count. This would be a 1. This would be a 2. This would be a 3. And a 4 is your pullback. So I would say, Ralph, in this case, we're trading a 4. We want to catch the bottom of that 4 and get in on the 5, and the 5 is the next. Remember, Elliott Wave, 1, 3s, and 5s move, 2s and 4s retrace. Great observation, though, because it dovetails perfectly with what we're doing with our Fibonacci's. Okay, what happened? Looks like we missed our entry, right? I wasn't aggressive enough. Essentially. Do we leave it? Do we leave it or do we move our entry? Maybe I move it down there to our Fibonacci level. Trading's hard, isn't it? That right there's tough. That's tough. One thing you guys got to remember, yeah, we missed it. Now, one thing you have to remember about this, and this is a great lesson, you don't worry about the ones you miss. You worry about the ones you take. There are so many trades out there for us to take, even today, in the next 30 minutes or an hour, that there's no reason to get caught up in what just happened. As a general rule, and I'm just going to tell you my own personal playbook, all right? My own psychology. The price flirted with us. It was getting very, very close to us. We didn't get filled up. What's happening? We're getting consolidation sort of right above our entry. As much as it pains me to do this, and it pains me, you got to pull it. In my view, from my experience, I would pull it. Now, that's very conservative. The other option is to move the stop loss down here, or excuse me, the entry down here, right around our 38%, and then maybe stop ourselves out down here, cut that risk maybe in half. I don't mind doing that. But what I don't like is when I'm sitting here at 46.50, 46.14.50, and I'm looking at lows of 46.15.49. A dollar range in this market is silly. I mean, the spread's 62 points, 62 pips. So you see what I'm getting at. Psychologically, you have to be okay with everything you do. For me, if that thing breaks down as a loser now after I've got back-to-back winners hitting my target, that's a psychological impediment. That's a rally killer. Goes back to my baseball days when I was playing. There's a rally killer. When you got a rally going and everybody's getting hits and scoring runs, don't be the last out. Don't be the rally killer. That kind of trade loss in and of itself doesn't hurt you, but the way that it comes hurts you. That's a rally killer. That's a momentum killer. Can't have it. Can't have it. Did we win the trade? We didn't get any money for it. Did we call it right? Perfect. There it is. It's right in front of you. Tested the demand zone. Boom, boom, boom. Could we still get in down here? I would say, yeah. 46.13, moved down $1.50, playing really tight, but it cuts our risk way down. We could do something like that. Let me see, Pops, and good to see you. The rejections show these are passive buyers' order at that 46.17. Well, I mean, that right there, I don't know. It looks to me like anybody's really looking to buy a dip, Pops, and that's sort of why I'm frustrated we just didn't get that. We could certainly move down to my Fibonacci level, which I feel incredibly confident with. Let's go to a 30-minute chart. And then we're going to go on to another market and see if we can find some action. Okay, so your 30-minute chart, really the Fibonacci is just based on the 15 and the 5. 30-minute, you can see essentially you're buying the center of that doji. That's what we were trying to do. It's not great. This would be the one that really put it over the top for me, though. Spike lows, little double bottom down there, nice rally. You got back-to-back dojis, real tight compression right around that noon Eastern, noon 15. That's a pretty strong buy. It really is. We'll wait and see how it pans out. That's for sure. All right, let's go on the hunt for another one. Let's see if we can find one. They pay us to wait. They don't pay us to trade. E-mini NASDAQ. Let's do a little business here. All right, 5-minute chart, E-mini NASDAQ. What do we got? There it is, clean as day. Rally, base, rally, and now we're sort of basing. Now we're basing. It's not as strong as that gold. See the difference between the gold? The gold is the base, nice steep, and then you're selling off in a big way. That's what you want. You want to get in on the retest and something like that. Now this right here, you know, we could have a lot of arguments about it, and this is where interpretation is a big part of it. 5-minute chart, boom. You could say that's the rally and that we're working the base right now. You could say that. You could also say, there's your rally, there's your base, there's your rally, here's your base, right? Well, how long's too long for a base? You're asking great questions. What I would recommend is when the price action gets really sort of stagnant like this, do this. Back off to a 15-minute. Okay, we're clearly in a base phase here, right? Clearly. How about a 30-minute? Not really anything. Got sort of a morning star down here. That ain't bad. It's not quite as tight of a doji as I'd like to see, but it's, you know, it's there. How about a 1-minute? Nothing. So if I was looking at maybe potentially this strategy here, rally base, I would want to see it make another leg up and then maybe buy down in here somewhere. Not really solid, though. Not really solid. Okay, so bigger picture. Let's say we want to select the market. Let's say we showed up to our screen where we want to trade the rally base rally. We want to get in on it. What do? How do we choose a market? Very simple. Go over here to your tote board. What's trending? What's trending? Is anything in an uptrend? U.S. oil's up 1.33%. That's a viable option. Gold's up big. That was our option. That's the one we wanted. Silver's up big. We can look at silver as well. Copper's up 1.5%. Not bad. Your Forex pairs. Let's see. We got the Aussie US dollar. Here's a 15-minute. Let's take it down to a 5. Probably going to be flat this time of day. Not really great. Maybe that's a rally. Maybe that's a base. Very short, though. Not overly directional. Trends there, though. How about when we step back to a 4-hour chart? like Ralph was suggesting, sort of, or not suggesting, but was interested in. Clear as day, isn't it? Clear as day. So we're looking at the Aussie, and we're thinking, okay, we want a long play, right? It's trending. We're up about 1%. It's a lot for a Forex pair. Where's the action at? I'll outline the base. Sort of try it for yourself, see if you can spot it. Then I'll outline it. There it is. Pretty good directional move right there. 70.66 to what? 71.28. Not bad. Flat line for about, a day, 2 days? And then there's your break. So theoretically, we'd want to buy down in here, of course. You always want to buy lower than where price is. You're at 71.77, down there at 71.18. That's an area you're going to watch for next week. Now you're heading up and away, right? So what happens when we base up here? Potentially, we're looking to go higher. Yeah. How about if we reverse from here for next week's trade? Pretty good area to be watching for the Aussie. What you want is good, clean price action. You'd love to see a top maybe come down in the first day or two. Maybe by Tuesday afternoon, you're testing this area. Not bad. Put a Fibonacci on it, on the aggregate wave. Depending on where it stops, you'd love to see it do something like this. Get that golden zone right in your base area. That's called trade construction. You're building trades. That's pretty good. 4 hour, it's plain as day. Go to a 1 minute on this Aussie. All right. Let's talk about it. Where's the base? It's dirty. It's ugly. It's dirty. It's very tight. The base right there, the low is going to be, 71.74? And your high right there is going to be, 71.75? Is that even worth doing for a pip? No. 1.2 pip spread? No. 30-minute chart. Not even as clean, is it? 4 hour chart. How about a 1 hour chart? Still not very clean. I like that 4 hour chart. Guys, 4 hours for the Forex. Not a bad way to do business. All right, let's go back to our gold. Yep, we missed our trade. That's okay. That's the way it is. We should have nailed that one, though. That's my fault. We should have been more aggressive there. All right, what is trending today, though? What's the trend of all trends today? If you guys have been watching the market, what is it? It's Bitcoin. Bitcoin's exploded. Look at this 4 hour business for Bitcoin. It's up and away. We had topside resistance I've been pointing out at about 70,000. Didn't matter. Did not matter. Bitcoin and gold are just running. How about a 5 minute chart? Nope. How about a 30? What do you think? It's hard, isn't it? It starts to get really hard. Is that area base area? Maybe right in there? Maybe. How about this area right here? What did we just do there? We fell victim to one of the biggest traps of ICT trading concepts. Anybody can go through historical charts and spot these things. Anything theoretically can qualify as a base, right? It's all open for interpretation. Remember that. What I would be doing right now is saying, ooh, look at that. That base is perfect. There are traders out there today that are probably doing live streams and they're probably making videos going, you didn't catch that trade? Look at that demand zone. It's clear as day. And I'd say, how is it clear? We took a 30-minute pause. To me, a base area is something more like this, where you trade sideways for a few price bars, not just one. But there's people out there, they're going to say, no, that's the best base of all. I would really debate that. That's more of just a breakout, just a real tight and then a break, inside bar break. To me, that's nothing. But, I mean, we can go back in hindsight and make it the greatest trade ever. Oh, throw some Fibonacci's on it. Oh, my God, it's 62%. It's a base. You see what I'm getting at? Don't think like that. We can reverse engineer anything. I mean, every trade's always the greatest trade once it's already over and hit the money, right? Do we still buy it from there? Is that a legitimate base? Or is maybe the base developing right now? Or is this the base? Do we step back from 4 hours and say, or is the base setting up now? See, to me, that's a base. Broke out. Boom. Move, consolidation, break. Is that a base? Not really. You kept moving higher. As soon as you get a flat line up in here, that's your base. Could a base set up right in there? Absolutely. Trade sideways for 3 or 4 bars, then you really are thinking about moving higher. Let's take this way down. Let's take it down to a 5-minute. It's really not a base on the 5-minute. Sort of an ascending triangle if you wanted to do that, but you sort of see what I'm getting at. So don't get hypnotized by these chart patterns. You know, they're there. Bases are there. I think there's one setting up right there on the 30. I do. Little pullback base action. Maybe we go higher from here. But sort of flatlining right now. I would wait on that. All right, let's see if we can find an actual trade. Then we got to execute something, or else we're going to have to go to our market profile stuff. All right, 30-minute chart here for WTI crude oil futures. OC, we're trading October WTI. See a nice break there, 30-minute there, 30-minute there. Now we're moving higher. Is this a rally-based rally? Not really. Not really. Not on a 30-minute time frame, at least. Let's take this down to, say, a 5-minute. Okay, now we have an opportunity. It's dirty. This is a dirty one, no question. You could say your rally started there, you based here, and then you rallied, right? So I would put our base area for this type of a trade right down in here. And like I said, it's dirty. It's not clean. It's not as clean as that gold. I mean, this right here, that was clean. This right here, we're up about 0.5% on the day. Are we really trending? Not really. Would this qualify as being a decent trade? Not really. Not really. Let me see. Alec, is base more credible when volume is high? Absolutely. Absolutely. So let's say, well, I mean, this futures chart's a great example. So the first thing I would be looking to do more than likely is get my TPO charts going. And so let's say on a 5-minute chart, we're trading that time frame. You know, what you'd want to see is your volume, really your volume profile. You'd love to see that distribution right in the middle of it, right in the middle of it. Let's look at gold, gold futures. All right, this is interesting. It's essentially the same chart, right? Basically. So you'll notice that the volume, all the heavy volumes are down here. Way down here. U.S. session, they're way down here, at least on the 5-minute time frame. Let's roll it back to a 30. Point of control, we are way above the point of control. We're really trading towards the top of value. So if you looked at it sort of like this from a 30-minute perspective, you know, and you can reverse engineer these trades any way you want. Like I said, you can make anything look good if you're really serious about it. You know, where would the base be? Be right in there, wouldn't it? There's your move. There's your break. You broke really down from down in here. There's a nice base, flat line. So you're looking at what, about 45.65? There's your move, flat line, sort of in this vicinity from about 46.61. I would really ignore that tail. I wouldn't give it much credit, but maybe that's where all the business was, 46.37-ish. So that really this $25 sort of area in gold is big. So let's go ahead and see where the volume is for today. It's right down in here. So the volume would be something like that. We could run a daily Fibonacci sequence, and I can give you probably an absolutely beautiful entry point. The problem with this stuff is it just doesn't come across the board very often. So you can see right down in the bottom of your base, which is sort of your daily range. It's really dirty. You're looking at that point of control right around 46.41, and then you're looking right at there about 46.47-ish. So what do you buy 46.50s during the overnight? See what I'm getting at? A lot there. You can combine all these approaches and really, you know, build some rock solid entry points that are beautiful. And then if Trump hits Truth Social, none of it matters anyways. But yeah, that's 100% right, Alec. I mean, that's a great observation. Is the base more credible when volume is high? Absolutely. Absolutely. All right, let's go ahead and see if we can go in on the prowl for some trades. Been looking. We've been looking. That was probably the best one right there. Didn't get it. All right, let's go ahead and take a look at the silver market. Silver also trending. I would say you're in a base right now. Really sharp consolidation. You know, the question is you need a break. You need a break and a pullback for us to get long there, silver. What else? What else is trending? Anybody see any trends out there? Not really, huh? Let's go to the YM. We're up about 400 points on the Dow. Okay, this is interesting to me. Mark our point of control. We're at our point of control right now. Probably want to take a long. That's what I would say. Let's go ahead and mark this on all time frames. Take this down to a 5-minute and see if we can, maybe we're in the midst of a base right now. Get our TPOs off of there. Not really. Not really. It's just sort of rotation. I mean, our break was back earlier in the day. Maybe something like this. That was during the London session, mid-London session. U.S. session right there, opening bell, ding, ding. How can you tell the volumes are huge? Sort of a real dirty rally, though. I wouldn't call that the formation that we're looking for. A 5-minute chart, though. Let's go to a 1 minute. Just isn't there, guys. Let's go back to the E-mini NASDAQ. E-mini NASDAQ futures. Just an absolute flat line on the 1 minute. Extremely flat. You know, is it a base right now? I would say rally, base, rally. Is this all one big base? Maybe that. I don't know. I don't really like it. It's not like the gold trade. The gold trade is probably the best example I could show you. I mean, I couldn't have drawn that up better myself, really. I mean, there it is. Rally, base, rally. Is that the same as this? Rally, base, rally. Not really. Not really. You're waiting for another break. So if you were to trade this right now, basically you're just either going long or short. All right, let's see if we can get a trade, though, on the E-mini NASDAQ. I'm sort of antsy here. We need to have a trade. Okay, so we just bounced off our point of control. That would have been a good one. Day late and $1 short, right? POC right there, though. Money in the bank again. Relatively strong. Let's go to the E-mini S&P 500. Interesting. Trading right at the point of control. Very tight, only up about 0.39%. You know, we want to make a move there or not. We have still about, what, $700 to play with, $750. I mean, we could take the sell right here from the POC. I don't think it's a bad idea. I just don't know really if you're going to get any love there. Market's flat. I would avoid this stuff. When you take these trades, a POC trade, you want to take it like from there, where you sell off and then you bounce and then you bounce. Certainly. All right, guys, I'm not seeing much that's trending, so I think we're probably going to have to leave it there. Maybe the Kiwi. Let's go to the Kiwi. I don't advise TPOs on Forex pairs. Let's go to a 4-hour chart for the Kiwi. Yeah, absolutely. Absolutely. Looks a lot like that Aussie, huh? There's your base. Rally, base, rally. Simple. What's not simple is being patient. So let's mark our base. For instance, if you're trading Forex pairs on the 4-hour time frame, you could have these bases ready to roll for Monday. You really could. Something like that, pretty nice. Let's go to the macro wave. Right from the bottom of the move to the very top of the move. What do we have? Yeah. That's what you want. Right in there. So these would be plays, you know, for next week. What are we trading right now in the Kiwi? 59.80 down to 59.39-ish. All right, let's see. Alec, have a look at gold as we're tracing back to our previous entry point. Okay, there it is. All right, so in my humble opinion, this base, we could say that it's still alive. I don't know that. I think that we needed it right there to really get that continuation. It looks to me like gold's going to be sluggish the rest of the way. Typically, that's what happens to gold this time of day. Let's go ahead and trade it, though. We got to make a trade. I mean, I'm getting bored. We need a boredom trade. I'm going to go right there. Let's go right there at about 13. Let's shade this one $1. Let's go 13.50, and we'll go ahead and buy it. I don't know that the efficacy is there for this trade. I really don't. I think that the base, we really want to get in on that when it's hot. To me right now, it feels like we're moving sideways as we have pretty much for the entire live stream here. Doesn't mean that we can't sort of buy the bottom of this range, though. Really. So if we get a pullback here, then we'll take it. Take profit. We can shoot for something maybe up in here. Conservative. Stop loss. You know, we got 700 to play with, 750 to play with. Put it right down below your base. Maybe do something like that. It's not a horrible trade. I've seen a lot worse. Any reason to buy gold right now is a pretty good one. Realistically. Not a bad trade. It's just we should have already got it. We should have already got it. So something to think about there. All right, guys. I had a pretty good, some good conversations with some of you this week. I got a great question. I'll watch that gold trade sort of out of the corner of my eye. But I had a question that I wanted to share with everybody because it's a pretty good one. It's a pretty good one. And this came from a trader earlier this week. He said I could use his message, so I'm going to go ahead and read through the message and then sort of address some of the questions. It's a lot of psychology, but we'll watch that gold trade out of the corner of my eye. I doubt it's going to come our way, but maybe it does. But this is actually pretty important stuff, so let's take a little minute and have some psychology on a Friday before everybody kicks off for the weekend and has a little bit of fun. When the market goes quiet, you know, it's a real question about patience, purpose, discipline, and identity. You know, and the key question is, how do you grow when there's nothing to trade? All right, here was an actual question from a client, not really a client, but a trader over How to Trade. So this is a real question. What lot size are you using? I believe it's 100. It's $1 a pip, Zonic. When the market goes quiet, do you ever go through periods where you feel neutral or down for a few days or weeks, especially when trading isn't giving you much? I still wake up, do my analysis, watch the Asia session before the Europe opens, and sometimes I can see the market is tricky. There just isn't a setup worth taking. Now, I'm getting better at accepting that and not forcing silly trades just because I feel like I should trade every day. After 6 years, trading has changed me in a lot of ways. I'm training, I'm eating better, working on my well-being, and trying to become a more disciplined and generally trying to become a better version of myself. But I still get certain days where I think, what am I actually meant to do now? Trading used to take up so much of my mental attention. When there isn't much to do in the market, there can almost be this empty or flat feeling. Have you experienced this in your daily routine? Psychologically, how do you deal with those periods without thinking you are not progressing in your career? And how is your relationship with trading purpose and identity changed as you become more experienced? It's a great question. It's a really great question because I know a lot of you are there. You know, it's one thing to take up something new and you feel like, oh, okay, I'm in here and I'm learning and I'm going to get better and I'm learning. And then there's the question a few years in where you're like, man, am I doing the right thing? Should I still be doing this? Is this a good thing for me to be doing? And one of the subsequent things that this trader wrote, and like in a follow-up message was, you know, I don't have many people to talk to in the markets. The people that I talk to at home, they don't trade. They don't really understand what it is to go into the market and trade. And because they don't understand, their answer is basically go do something else. Go do something else. Go do something else. I've heard it myself. That's for sure. These are challenging questions. I'm going to break it up into small parts, see if I can give a decent answer. So the question, do you ever go through periods where you feel neutral or down for a few days or weeks? Yes, 100%. Absolutely. There are periods in this market when it gets flat and it is dead as disco. And when the market's flat, you really start to question everything. There's an old saying, if you have time to think, you're usually pretty screwed. You're in trouble. I 100% find that to be the case when the markets are moving and they're fast and I don't have time to sit around and think. That's when I'm at my best, when I'm reacting. Boom, boom. Reading price action, reacting. So absolutely, I go through those periods where I'm neutral or down, yeah. It's hard to get up and do this every day when you're not getting that reward, when you're not getting the financial reward or even just the winning trades or even trades coming your way just to execute. The hardest thing you can do. Yesterday was hard. Today's hard. We haven't got a trade yet. That's 2 days in a row. It's tough. Trading has changed me in a lot of ways. This is what I do want to say. After 6 years, trading has changed me in a lot of ways. I love that. I'm training, I'm eating better, working on my well-being, trying to become more disciplined. That right there, if you don't get anything else out of the markets but self-discipline and maybe being able to take care of your personal life or maybe your business affairs or your personal affairs better, then trading's a bonus. Then trading has been a positive thing. If it's put you on that path to where you can do positive things in other facets of your life, I would look at trading as a net bonus. A net positive, 100%. That is a big, big bonus of what a lot of this lifestyle can be. So that's a fantastic thing. So that right there made it all worthwhile. So I would look at that and I'd say, you know, if you're wondering what you're doing with your life, yet you're a more disciplined, structured, focused person, then I would say the markets have been great. The markets have been good to you. Certain days where I think, what am I actually meant to do now? Yeah, pretty much about every 3 or 4 days I get that one. A lot of you are young. A lot of you are my age, middle-aged. A lot of you are older than me. But if you're young, you probably aren't dealing with that one just yet because you think you have a plenty of time to do everything. And when you get a little bit on further down the road, then you really do wonder about the time quotient. And you say, what am I actually meant to do now? Yeah, I get that question a lot. And when I say, well, I am where I am, and I feel like that's where I'm supposed to be. So that's sort of how I deal with it. But if you're fighting a conflict every day where you're like, man, I hate these computers, I hate this room, I hate the markets, I'm tired, I don't want to do this anymore, then there's a very simple answer: don't do it. Nobody's making you trade. You do not work at the trading desk for Goldman Sachs. You do not have to trade. And if it's becoming a negative on your life, self-destruction, get out of it. But if you feel like, yeah, maybe I like it here, maybe I like doing this, then you keep going. That's the way I look at it. Trading used to take up so much of my mental attention. When there isn't much to do in the market, there can be an almost empty or flat feeling. Now, that's a hard one. That's a hard statement to break down because if you do think about what he's saying here, trading used to take up so much of my mental attention. Yeah, because you've been in it long now. You've been in it for 6 years. You know your strategy. You know you can read a market. It's not that hard anymore. You look at it and you go, okay, this is flat. This is open. Like our rally-based rally today. If you work the rally-based rally charts for a month, you're going to be seeing those things in your sleep and you're going to be good at it. You're going to say, okay, that's a base, that's a base, that's a base, that's a base, that's a rally, that's a base. You're going to be able to do it really fast. And what happens is you're probably going to get bored. God, give me a boring business. God bless me with a boring business. When your business is boring, typically you're going to do very well financially, but it is not. It doesn't give you that same stimulus as when you first started, when you got that juice off of reading the market and hitting one and going, oh yeah, this feels great. The juice, what he's talking about is when the juice is gone, an empty or flat feeling, when there's no more juice. All of a sudden you win and you're like, who cares? One of my mentor that got me into this, my uncle, he used to tell me over and over again, he goes, I don't even really like the trading. I enjoy the research. He was in it for the intellectual curiosity. That's what kept him going in the markets for 40 plus years. If that does it for you, great. If winning the money does it for you, that's good too. But just remember, when that juice is gone, it's going to be an empty or flat feeling. And I highly recommend in those situations, you either step back from the markets or throw yourself into the research or learn a new strategy or start looking at a new market or always be learning and always push yourself into places that you're uncomfortable. That'll take care of the empty or flat feeling as long as you're moving forward. That's what I would recommend. And moving forward is not about having the Ferraris and the private jets on YouTube. That's not what it's about. It's about getting better every day. Have you experienced that in your daily routine? 1,000%, 1,000%. I've experienced all of that, all of it. Psychologically, how do you deal with those periods without thinking you're not progressing in your career? Well, there's always a money thing. I mean, if you're not making enough money to make a living, then you've got to do something where you've got some money coming in the door and you can support yourself. That's the bottom line. So what I would do, if that was the case where it's just like financially, this just isn't working for me, I can't do it, I got to go do something, then you go get the job. Then you go into something else where you can make a living, but you never leave the markets. Markets are always there. Then they just become a supplement to what you're doing in your everyday life, whether it's driving a truck, whether it's traveling nurses right now are making a fortune. There's a ton of people, a ton of demand out there. You could be a traveling nurse in like 2 years, get your degree, go for it. What I'm saying is it can be anything, but markets are always going to be there. They can always be a part of your life. So if you have to move on from trading, maybe the trader leaves the market, but the market never leaves the trader. You can always trade no matter what you're doing. So That I wouldn't worry about too much. The career aspect of it, if it's a money thing, then you got to address the money thing. You got to figure out a way to make money, to make a living. But the trading can be a part of that. If it's a deep introspective thing where you're like, then you've got to go find something else to do, because then trading probably just isn't for you. You don't want to do it anymore. You're like, man, I'm wasting my life. If you start to have those feelings where you're wasting your life, you know how many old guys I've heard sit around saying, man, I wasted my life. I go, well, life, I don't think it's ever really a waste. But if those are your feelings and that's your psychology, then you just go do something else. You just get away from it. And it's hard, because once trading gets its hooks into you, very, very few people that where it really hooks them and gets them in to where they got to see what the markets are doing and they're in it every day. It's hard to leave that. But you don't have to leave it. You can always have it going just on the back burner. That's what I would recommend. But if it's psychologically, if there's a conflict, a deep conflict to where you've just like, man, this just doesn't feel right to me, then you got to go do something else. There's no two ways about it. Last question. How was your relationship with trading, purpose, and identity changed as you become more experienced? The juice isn't there anymore. The swings aren't there. You find that the big gambling swings, the gambling streaks, staying up all night trading gold, doesn't happen anymore. The losses, as long as they're manageable, they don't hurt. When you take a big loss, they hurt worse as you get older and as you're in it, because it's just a no-no. You cannot do that. And it still happens. And when it does happen, it really cuts you deep. The purpose is always, for me, it's been the same. It's to make money, but it's also to be a good trader, to break these things down, to be good at your analysis, to be solid in every way, just to have game. You know what I mean? Just to show up and have game. That's really important to me now, not doing things that are stupid. I don't like doing that. So I guess my standards for my trading have gone way up. I hold myself to a very, very high bar when it comes to trading and when I make mistakes. That's why we lean into the losers on this. When a mistake's made or something doesn't go right, I'm down there with the pipe wrenches trying to figure out which pipe's leaking so we can fix it. That's how my relationship with trading. When I was young, when I first started the first several years, I would be in there reading charts, doing back testing, hand back testing. I'd be doing that stuff for hours and hours and hours and hours. I don't do much of that anymore. I've got my routine down. I show up in the morning, we do the prep, we put this thing to bed in the afternoon, and we get it ready to go again. I don't sit around looking at charts all night. Sometimes check in to see what's going on. Maybe something's trending on X. But other than that, no. Purpose has always pretty much been the same. It's been to be profitable and make money. Identity changed. You become more experienced. Yeah, my identity, I'm much more conservative now than I was when I was younger. I had a lot of the financial nihilism that Generation Z suffers from right now. If you only got a couple $100 in your pocket, what's the difference? You might as well just go bet it all. And if it comes in, great. And if it doesn't, it doesn't. But over the years, going through what I did in the real estate market and the construction industry and the big washout back in 2008 to 12, that really taught me the value of a dollar. And it's important to preserve your capital. That taught me capital preservation in a big way. So I do want to thank the trader for asking me that question. He did that over at the How to Trade community. Sent me a PM, and those are absolutely fantastic. If you have a question you'd like me to answer, be sure to throw it my way. And if it's a good one, we'll go ahead and dive on in and see if we can get it. All right, guys, let's go around the chart one more time and then we'll sign off for the week. See if we can find one last trade. Let me see. Alec, God give me a boring business. This is pure golden wisdom. Yeah. I ChatGPT'd that the other day. I said, who said that? And it said, nobody said that. I said, okay, that's a Shain Vernierism. Then I'm going to trademark that. That's how I'd like to learn to trade. If it's boring, you're probably doing something right. The satisfaction comes from a job well done. The analytics being, there's a word out there right now that's everywhere. It's called based. Oh, that's based or that's based. I go, as it pertains to trading, being based is just having your head on straight. Not going in these huge gambling binges to where you make a fortune and then lose a fortune. It is a job well done to conduct yourself with professionalism in these markets, though, and not get too carried away and not let your head get too big when you're winning and don't get too small when you're losing. That's a job well done. It really is. All right, one more around the horn of the chart. See if we can rip one last trade. I got to make a trade today. You see right here, we missed it, guys. That was our base. That was our base. I mean, the entire world wants to buy gold right now, and we're left out. We probably should have just been aggressive there and let it twist. That's all right. All right, let's go down. Let's make some market profile trades here. We may not get a rally-based rally today. It doesn't look like we will. All right, WTI crude oil, 4-hour base right there. I don't know that I would care about that with crude, though. 30 minutes is a pretty good one. Something like this. Okay, this is interesting to me. Let's get our market profile going. TPO. Yeah, I mean, you'd love to buy K period bid from right down there. You're still about 47 cents off, though. Let's go down to a 5-minute. I mean, that's your base. Do we want to buy it? Upper end of value. Could. This area right in here. What do we got there? A low. See 05. So we'd be playing the break underneath 87. So a breakdown maybe to, we could buy the top of value and just make it a trend play. Let's try something else here. See if we can identify a Fibonacci level. Should be able to. Pretty good market structure here. Let's go U.S. session. We'll go New York session for WTI crude, see where we're at. All right, that sort of is our base, 86.95. Let's do it. We're going to go ahead and rock a 3-banger. I want to buy limit order right there at 96. Let's put it down, see what happens. Okay, now remember, we have about $750 to play with here. I'll give it a few minutes, and then we're going to sign off for the week. But theoretically, we could say this is sort of a rally-based rally trade. It's not a great one. This is more of a Fibonacci trade on a day where we're seeing a little bit of positive price action in crude oil, but not a whole lot. So theoretically, that would be it. So if I was going to set my stop loss right in there, I mean, essentially that would be the bottom of your base, somewhere down in there. I mean, is that really wise, though, this time of day, trying to get a bounce maybe back up to 17 from 96? It's not likely. It really isn't likely, but potentially we could get that trade. Just remember, it's a Friday. So what happens on a Friday? They shut the markets down. And once again, this just isn't a real great base. I mean, if we say that that's the bottom of sort of the intraday rally here in the United States, the late day rally, so there's a move, there's a base, there's a move, there's sort of a base and a reversal. Is this a good trade? Not for a rally-based rally. No. What it is a good trade for, though, is a Fibonacci level based on the New York session. Absolutely. I wouldn't be looking for that, though. This would be looking for something more like this. Maybe like an 04. As far as this goes, there's no way we're leaving it down there. I mean, we could put a flat 240 to 240. That's about 8 ticks. Take this down to a 1-minute chart. We'll give it a couple more minutes, but that's going to be about it, I think. Oh, outstanding response to the question, Shane. Oh, thanks, Ralph. They're great questions. If you guys have any questions at all, be sure to reach out and send me a PM over at How to Trade, and we'll highlight some of these questions because I know a lot of people have them. I always thought that, if you're having questions about, life questions or am I doing the right thing or should I be doing this? I always say treat the markets as a supplement. Make it a revenue source. They say most millionaires have over 6 revenue sources. So if your goal is to be a millionaire, maybe a revenue source, the markets are just one revenue source. Maybe you got a job, investments, and you're trading. I mean, realistically, maybe you're driving an Uber. Working as a copywriter online and trading. There was a time when I was looking at truck driving. They were paying $100,000 a year to drive a truck, and I said, you know what? I could drive a truck and arrange my brakes to where I can trade. Truck drive trade. What's that worth a year? You might find you make a lot of money doing it. What I'm saying is there's no rules. There's no rules. Remember that most millionaires have over six revenue streams. Why not make trading one of your 6 while you're figuring it all out? And once everything gets big enough, and then you throw yourself into this and you go, you know what? I like trading better than driving the truck or driving the Uber, or maybe I like trading better than proofreading things online. I think that it's a skill that if you can master or at least become proficient in, it can really help you achieve your goals, no question. Whatever those may be. And if they can't help you, probably the best traders out there are the ones that hate trading. They probably show up and go, I hate this, but I make money, so I better do it. All right, guys, that's a wrap. I'm not going to sit here all day waiting for this crude oil trade, but that would be probably the last one of the day. Let's go ahead and we'll go around the horn real quick on our market profile stuff, but I do believe that we missed our opportunity on gold, and it was obvious. It really was an obvious one. Great illustration of rally-based rally, no question. All right, let's go back to our equities indices and see if there is a trade anywhere to be had. Incredible rotation right there in the E-mini NASDAQ. Where's the NASDAQ when you need it? YM. Okay, this isn't bad. This is something that we could definitely look at. Right there is going to be your opening bell, ding, ding, your New York low, right there to your New York high, and you've sort of got an issue. I mean, that's a beautiful trade if you can get it. That's great work if you can get it. 53, 225, that's 38%, it's 230. We could buy 235s. Let's take a shot. I mean, we'll give it a few minutes, but we've sort of 53, let's go 235. Let's go ahead and roll 4 contracts out there. We do have some money to play with for this week. $20 a tick. It's viable. It's very viable. I mean, that's not a big trade. Let's see, take profit. Yeah, let's look for a little bump, maybe something like that. See if we can grab a quick 250. Let's take this down to like a 1 minute. 5 minute chart. Let's look at 5. Yeah, it's not a rally-based rally, but it's a point of control couple with 38% of the New York session. So I like that. I like that a lot. We'll manage this in a dynamic fashion, which means I won't have an initial stop loss. Really, our happy zone's down here right around 53, 230-ish. So we would shade 5 ticks just because we want to get the move. Yeah, there it is. That's pretty good market structure. Sort of real choppy in here, choppy in this area. Get rid of our TPOs. I mean, that's a base right there. You're talking about 30-minute bases. Look at that base. You almost got the pullback there. Do you really have a base today? Not really. Not really. Sitting at 53, 262. There's our trading dome. It's a good trade. I just don't know that we get it right now. I'd feel pretty confident about it, though. No question. All right, we'll let this one spin for about another 2 or 3 minutes. Are there any other questions out there for the week? If you guys have anything you'd like to ask, now's the time. We got banged up on the gold trade, but right now trading about 46.24. So that's short from 38%, man. It didn't mean anything. I mean, this feels like gold back at 5,000 area to me. Bitcoin definitely rallying. Tick, 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 ticking much higher at about 6%, up 6% on the day. I want to buy Shiba Inu. It's up almost 9% on the day, and it's down around that 5 level, but don't know that we're going to get it. All right, guys. I'm going to scratch this stuff and move on. Really a solid week. Just sort of wrap it up. No trades for today, but we'll be more aggressive next week. We just got to get in there and make the trades. So this week was really a big winner. Pretty good winner last week, or the last one before the vacation. I think we were up about 900, somewhere in there. So it's been pretty good, actually, to show you. We started with what? We started with 10,000 down here. I wanted to sort of show what you can do with a retail account. We started with 10,000. We're up about 3,100 overall since we started doing some of this trading stuff. And like I said, the streams are going to be changing format here relatively soon, probably in the next month or so. We're going to be doing multiple streams a day, more than likely, and some of them are just going to be strictly live trading, where I go through and I just trade the markets and show you P&L in real time. And then the other ones will be sort of our workshops, things like we did today. And then we'll always be doing Q&As and interactive streams, covering the news and all of it. So a lot of changes. I will say it's sort of the end of an era here. This is going to be the last live stream from this office. I'm moving shop. I'm packing up, moving up, rolling up stakes and moving shop. So that's going to be an interesting time. I got to get the new office all together and see about putting it. I've been doing this in this room for so long, about 3 years. So we're going to have to put it together. But it's going to look a lot different. May go to a green screen. I don't know. Depends on if I can get a decent background going. Office is a little bit bigger. Well, it's a lot bigger than this, but I just got to figure out how to configure it so it looks decent back there. Still holding out hope we could get this E-mini Dow to dump and get this last trade, but I don't think we're going to get it. It's coming off. Still about 30 points up the queue, though. All right, everybody, that's a wrap. I want to thank you for joining me this week. We did a lot of live streams, a lot of hours live this week. I'll have the full schedule up over on the How to Trade platform here relatively soon, probably in an hour or two. And then we'll go ahead and get those ironed out and ready to rock and roll for next week. We're going to have a lot of fun. We're going to get in there, do some trading. We're going to cover all the big events. Like I always say on a Friday, if you are carrying home live positions, be very careful. Trump can do anything. Iran can do anything. The markets can do anything over a weekend break. And if you're caught on the wrong end of it, remember, you're liable. Market gaps against you. You got to cover it. All right, everybody, have a fantastic trading session. As always, trade the action well, and we'll talk soon.